live or watching the replay, you are in the right place if you're sick and tired of applying for funding, but you keep getting denied. And I'm going to break down something today that people never explain. The fact that every banking type is not for every funding product. You need to know the difference, and I'm going to break that down today. So if you're applying to the wrong bank, even if you have good credit, you can still get denied or approved for far less than you deserved, okay? But before we get started, a few housekeeping rules. At any point, if I'm providing any information you can use, give me some love, give me some hearts, do whatever you need to do to let me know, because I like the feedback, okay? And before we get started, just a quick disclaimer. None of this information should be considered financial advice, legal advice, or tax advice. I am not a banker, a lender, or a financial institution. This is just for informational and educational purposes only, all right? So why people get denied even when they have good credit? These are the most people who end up in my mentorship, right? So what I'm going to do, most deniers are not because you have a bad credit score. You applied for you may be looking for a specific loan product, right? But you probably applied to the wrong institution. So you're applying for the product at the wrong banking type. They happen when you apply. So denials will happen when you have good credit. They will happen even after you've applied, when you apply to the wrong bank, when you apply to the wrong product, when your profile did not match the bank's risk appetite. That's where I come in at, right? You applied out of order, okay? Funding isn't about luck. It's not about emotions. It's about strategy, all right? Banks are not all the same. They lend differently, to approve differently, and they value different things, okay? Once you understand bank types, approvals seems random, all right? So they stop feeling random right away, because what the average person does, they just go and they feel like, oh, they said all I need is a 680 credit score. I have a 750 or I have a 780. Let me just go ahead and start applying and I know they're going to approve me. No. So I hope you took that information to heart. So once you understand the different banking types, your approvals will then stop feeling random. Okay? Now, here's bank type number one, credit unions. I love them. If you're in the rebuilding phase, this is where you should be. Let's start with credit unions because these are some of the most powerful and misunderstood institutions. Okay, they love relationships. All right, what credit unions care about, for your notes, they care about relationships and membership. Stability over flash. They like stability over flash. Personal credit behavior, lower risk profiles. They are not profit first banks. People do not know that credit unions are nonprofit banks. So their goal is to help you rebuild your credit profile. So that's why they offer products and services that does such. They have like quick cash loans. They have like Navy Federal. They have the loans and secured loans that will add lines to your credit report, thus boosting it up. So you have to understand that this is what your credit union based banks should be used for, is to rebuild your personal credit profile after credit repair, or if you're just starting out and you have a thin profile. All right. The best products at credit unions will be high limit personal credit cards. They also give you higher limits than the national banks. Okay. Business credit cards with personal guarantees, business lines of credit, auto loans and refinancing, your home loans, for personal product loans. They offer the best interest rates and sometimes SBA lending, okay? Examples of a credit union will be Navy Federal, PenFed, Alliant Credit Union, okay? These institutions are ideal if your credit has just recently been cleaned or if you have lower credit card limits, all right? This is where you go. You don't go to Bank of America. You go to a credit union when you're in the rebuilding phase. So if your personal information is messy, This is when not to apply to a credit union. If your personal information is messy, if you have recent late payments, if you just joined yesterday and applied aggressively, they will deny you. Credit unions rewards patience and relationship over time. Trust me, I know. Anytime someone comes to me and they have low credit limits or they just came from up under credit restoration, our strategy is always credit unions. Key for your notes. All right, bank type number 2 are your national banks. Next are the national banks. These are the household names. You have like Chase, Bank of America. Those are national. That means that this bank is in every state, everywhere you go, okay? What national banks care about, they operate very differently than a credit union. You can very well go inside of a national bank with a good credit profile, sit up, open up a bank account, and ask for funding that day. Okay, but they do want a relationship. Okay, so you open up the banking account, but you don't need to nurture that relationship like you will be required to do with a credit union. Thank you for the love. Thank you for the love. Thank you for the love. Okay, so here's for your notes what national banks care about. They care about data, algorithm, internal risk scoring. Unbeknownst to you, there is a risk scoring model inside of every bank. They, outside of your credit report, they score you as well. And it will behoove you to understand that. All right. Long-term profitability. Okay. What does that mean? How much money do you have in the bank with the national bank? Because they re-lend your money out. So the more money that you have inside of a bank will, according to the banking system, will allow them to extend more loans, thus benefiting from you. That's what that means. They also rely heavily on automated underwriting. This is why a lot of the things that I talk about, the base information, everything needs to match. If that isn't in order, a national bank will deny you like that. They don't have time. They're all over the country, everywhere. They have hundreds and hundreds of years of history of banking. They don't need you. Okay? You need to understand how to play ball. So the best products at national banks is what I love. Business checking and savings accounts, starter business credit cards, merchant services, even business insurance. Okay. Relationship-based expansion later. Here's what that means. So if I go to Chase or I go to Bank of America and I start out with a $10,000 credit card, over time that will grow. I love national banks for that. So it would behoove you to understand how to build a proper relationship with each bank type. All right. So examples will be Chase, Wells Fargo, Bank of America. These banks are great once you already have established a relationship with them and you're already established. They are not beginner-friendly, high-limit funding. Okay? They are going to do what is known as credit match. So if your highest credit card is $1,500 and you immediately go and apply to Chase or Bank of America, they're going to match that. They're going to also give you $1,500. They're like, hey, Chase gave them $1,500. We're going to give them $1,500. All right. So the common mistake that people make, people apply here first because they feel the brand feels safe and they're everywhere. You've been inundated with Chase, Wells Fargo, and all of this. You think that's the bank to start at, and it's not. But safety doesn't equal approvals alone, guys. You need to understand. All right, here we go. Our bank type number 3, which are regional banks. I love regional banks, right? Now let's talk about regional banks, which are one of the most underrated categories. You have no idea. Where Chase will give you up to a $50,000 no documentation funding business line of credit, a regional bank will give you up to $100,000. So you should know these things. What do regional banks care about? They care about your story, local market presence. They like your revenue trends, banker relationships. They also love relationships. You can actually talk to decision makers here. So you go inside of the bank and you can actually talk to the decision maker right there. This is why it's highly and utterly important that you walk inside of a bank and you build a relationship with your banker rather than hiding behind a computer screen and trying to apply. All right. So best products at regional banks. Here's where I always tell my clients to go ahead and look into business insurance. People don't think about that. You don't think about that. Regional banks always offer business insurance at a very economical price. All right. Get your business insured. So best products at regional banks: business lines of credit, term loans, equipment financing, real estate backed lending. Okay. Examples will be Truist, Regis, KeyBank, PNC Bank. All right. If you have a business that's making money and you can explain it clearly, regional banks are powerful. You can also go in with that story and what I was talking about yesterday. I'm live here daily. All right. So you better catch me. Okay. That's all I have to say. So bank type number 4 will be your community banks. People do not pay attention to them. Community banks are smaller but mighty. They care about the community. They're there for that. And here's what community banks care about for your notes: relationships, local involvement, cash flow consistency, character lending. Okay. Best products here: small business loans, business lines of credit, real estate and construction loans, long-term partnerships. These are ideal if you plan to stay in one area and grow. So if you're a real estate, like if you're local to Atlanta, like South State Bank, I send all my real estate people there. When you go in and you make that relationship with them and you start proving and building that relationship over time, they give you more funding and more funding and more funding. Who is that trying to come on in? Yes, if you have any questions, type it there. Now, the ACC strategy to gain access to credit unions, all right? It will give you access to hundreds of credit unions. So listen up. Here's the ACC strategy, which will unlock your potential to join hundreds and access hundreds of credit unions. All right. So now I'm going to share one of the biggest bank secrets that nobody knows about, right? What is the ACC? It's the American Consumer Council. It's a nonprofit membership organization. All right. When you join, you gain eligibility to hundreds of credit unions where you would not have had the ability to qualify to join, right? And this is nationwide, that normally require employment or geographical affiliation. Joining the ACC is the cheat code. Why this matters: you bypass traditional membership issues. You gain a stronger and lending pools. It's available to you because now you have access to hundreds. You can strategically choose the best credit union for your product and your goals and your profile. Okay, how to join? Join the ACC online. All right, use your membership certificate. Apply to eligible credit unions strategically. This alone has helped clients with approvals they could not get elsewhere. So if you're just starting out in the starting out phase and you're rebuilding, you can have a plan to just go to credit unions. Why? Because they like to lend out with higher credit limits and lower interest rates. You can go and be very, very successful with a funding run with credit unions. That's what paid for information, I'm telling you. For your notes, take heed, all right? How to choose. Now, here's how to choose the right product, to how to choose the right bank for the right product, all right? Here's the simple framework: high limit credit cards, credit unions. Build business lines of credit, regional and credit unions, regional banks and credit unions. Starter accounts, national banks. Relationship lending, community banks. Stop applying everywhere and start applying instinctively and strategically, intentionally. All right. Once again, for your notes, here's the simple framework. Okay. High credit card limits, credit unions. Build business lines of credit. You want regional and credit unions. Starter accounts, national banks. Relationship lending, community banks. Okay. Once again, stop applying everywhere at all times in any bank and start applying intentionally. All right. Now, in this training, I've helped you understand what product to apply to for what type of banking institution. What are the different types of banking institutions do we have? We have community banks. They care about community-based things. They are used for long-term relationships. We have credit unions. They like to approve you for higher credit card limits when you apply, and they're there to help you rebuild your personal credit profile. National banks, they care about you already being established, or if you're coming in for a starter account, okay? Regional banks, they also like relationships, and they also care about, and you can obtain higher business lines of credit when you're first starting out with no documentation, all right? I want each and every last one of you, if you're coming up if you're here live or you're here under the replay, type the word boot camp, and I will send you a link to my no cost, right? No out of pocket cost. I will mentor you 30 days for free with this information. I know. I love you. I love you. I love you. I am here to help you reach your personal financial potential. All right. So inside the boot camp, I break down credit readiness, banking sequencing, application timing, funding strategy by profile, how to avoid denials before they even happen. So comment boot camp and I'll send you the link right now. So if you're watching a replay, this still applies. Okay. I love you. I love you. I love you. Be amazing. Be